The moment you reached state pension age, something fundamental shifted in how the government is required to treat you financially. A whole category of charges, levies, and recurring costs that younger people still shoulder quietly became optional for you or disappeared altogether. And here's the part that costs people a fortune every year. Not a single agency whose job it is to collect those payments will ring you up and say, right, you can stop now. I need you to understand what I'm actually saying here because this misunderstanding is the single most expensive one I encounter year after year in my practice. Reaching 65 or your state pension age, depending on when you were born, didn't just unlock your state pension or your free prescriptions. It silently reclassified you into a group that HMRC, your local council, the Department for Work and Pensions, and several other bodies are legally obligated to treat differently. There are bills people under pension age must pay in full that you are no longer liable for. There are levies that shrink, freeze, or vanish entirely the day you cross that threshold. But here's the trap that drains thousands from people's accounts every year. Being legally entitled and actually receiving the relief are two entirely separate things. The system doesn't refund you automatically. Your council doesn't post you a check. HMRC doesn't send a birthday card saying, congratulations, here's what you can now stop paying. You have to know the relief exists, and you have to submit the application. That gap between qualifying and claiming is the reason the vast majority of people who are fully entitled to these benefits never see a penny of them. And before you decide this isn't relevant to you, let me dismantle the biggest myth that keeps people from claiming what's theirs. This is exactly how people talk themselves out of money that's sitting there with their name on it. Some assume this sort of thing is only for pensioners who are genuinely struggling financially. So if you own a comfortable home that's paid off, you tune out and assume none of it applies. Then others assume the opposite, that these schemes are only for the wealthy, the ones with big estates and private advisors. So if you're living mostly on your state pension, you tune out too. Both groups are wrong, and both are leaving money unclaimed. Some of the reliefs on this list deliver the biggest impact to the lower income pensioner. Others are worth the most to the person sitting in a home that's doubled in value over the past decade. On every single one, I'm going to tell you exactly who benefits most. So no one watching can honestly say, well, that bit's not for me. And if you're renting right now, don't click away. One of the items on this list directly controls how fast your rent is allowed to rise. So let me tell you who I am and why I'm the one walking you through this. My name is Eli Graves. I'm a solicitor who's spent over 15 years working with families navigating probate, council disputes, and government agencies. I've sat in countless meetings with local authority assessors, DWP caseworkers, and HMRC officers on behalf of ordinary families. And I'll tell you the most painful pattern I've seen in all those years. It's not the people trying to cheat or game the system, those are rare. The painful one is the honest pensioner in their late 60s, 70s, or 80s who's done everything right their entire life and who is paying bills they were legally exempt from years ago simply because not one person ever sat them down and told them which form to file. That's the most expensive kind of mistake there is because it's completely invisible. There's no red letter, there's no penalty notice, there's no alarm. There's just money quietly leaving your account every month, every year that never had to leave at all. So let's fix that right now. Today, I'm going to walk you through 5 of these, one at a time in plain English, with the exact thing you need to ask for on each one. Then I'm going to give you a few bonus strategies at the end for the homeowner who has real assets, because those last ones can be worth a small fortune, and almost nobody talks about them. And I want you to stay with me all the way to the end, because the fifth one on this list is the highest value of them all, and also happens to be one of the very easiest to claim. If you only act on one thing from this entire video, it's probably going to be that one. Let's start with the newest one because it's so recent that almost nobody has caught up to it yet. And that's exactly why it's being missed. Starting with the 2025/26 tax year, every UK taxpayer who has reached the age of 65 qualifies for an increased personal allowance, an additional £3,000 on top of the standard threshold before you pay a single penny of income tax. And I want to be precise here because people get this wrong. This isn't instead of your normal personal allowance, it's on top of it. It's an extra £3,000 knocked off your taxable income just for being 65 or older. And if you're married or in a civil partnership and both of you are 65 or older, that's £3,000 each, £6,000 as a couple, stacked right on top of everything else you already get. This is brand new. It runs through the 2028/29 tax year. And here's the part that surprises people. You get it whether you're employed, self-employed, or living entirely on pension income. It doesn't matter. Now, it does begin to taper once your income climbs past £50,000. For a single filer, it starts shrinking once you're above that threshold. For a married couple, it's £100,000 combined. At the very top, above the upper cutoffs, it disappears entirely. But think about who that leaves: the vast middle, the pensioner living on a normal, modest income. For that person, this is real money taken straight off the amount HMRC is allowed to tax. Here's what genuinely bothers me about this one. The people it helps the most are the exact people least likely to catch it. The 65 plus filer living on a normal income who files their own simple self-assessment or hands it to a basic accountant who's moving fast through a stack of them. That's precisely the person who won't notice whether this new allowance was applied and who will quietly overpay without ever knowing. So the action here is simple, and you can do it in 2 minutes. When your return is done, before you sign it, look at it and confirm that the additional age-related allowance was actually taken. If you use software, make sure your date of birth is entered correctly, because that's what triggers it. This isn't a fight with anyone. It's a line on a form, and you just have to make sure it's there. Number 2 is your council tax bill. And this is where the biggest pounds on the entire list are hiding. So pay close attention, because there are actually 3 separate reliefs stacked on top of each other here, and most people don't have a single one of them applied correctly. The first is council tax support. What it does is reduce the amount of council tax you're required to pay, sometimes down to 0, depending on your income and circumstances. Every local authority administers this slightly differently, but in nearly every council, it's real money. And here's where people get caught. Most pensioners assume council tax support is automatic, that it just happens when you reach state pension age. It's not automatic. You have to apply, usually through your local council's website or by ringing them directly. Apply once, and if your circumstances don't change, it stays on. Miss it, and you pay the full bill that year for no reason at all. The second relief sits right on top of that first one. It's the council tax discount for single occupancy or for properties where everyone is over 65. Most councils offer an additional reduction, often 25%, if you're the only adult living in the property. And this is the one the council will almost never write to you about on its own. It's a completely separate application, and you have to ask for it by name. In some areas, if everyone in the household is of pensionable age and on a low income, you can stack this on top of council tax support and bring your bill down to nearly nothing. And here's the part where comfortable pensioners wrongly tune out. They hear the words low income and assume there's a means test they'll fail. But in more than half the councils that offer this, the thresholds are far higher than people assume. You might have £50,000 in savings and still qualify. Age and household composition are often the only qualifications. The third one is the most valuable of all, and it's the council tax exemption for certain property types or circumstances. Here's what it does. If you're severely mentally impaired, or if you've had to move into a care home and your property is unoccupied, or if you're a pensioner living with a disabled adult dependent, your council tax can be wiped entirely. From that day forward, it doesn't matter how much your property is worth. The bill is 0. In some councils, once you file the exemption application, your liability is frozen at nil. Your home can double in value, the bill cannot rise. So who does all of this help the most? Honestly, everyone, the basic council tax support helps the lower income pensioner the most in raw percentage. But the exemptions and discounts are worth a small fortune to the person sitting on a paid off home that's tripled in value these last few years because they're the ones staring down the biggest increases. And renters, I told you this one was yours too. Here's why. Your landlord pays that council tax, and your landlord passes every pound of the increase straight into your rent. When those bills are frozen or lowered across a community, rents stop climbing the way they have been. Number three is your NHS prescription charges. This is the one that gets quietly added up every time you collect medication from the chemist, month after month, year after year. In England, that charge is currently £9 and 90 pence per item. If you're on multiple medications, that's £30, £40, £50 a month disappearing. But here's what almost nobody is told clearly. If you're 60 or over, you don't pay prescription charges at all. Not a reduced rate, nothing. It's automatic once you hit 60, and it applies whether you're working, retired, wealthy, or on benefits. There's no income test, there's no form. You just show your age, and the charge is waived. But here's what genuinely bothers me about this one, and it's why I'm spending extra time on it. A shocking number of people don't realize the age threshold is 60, not 65. So they keep paying for years after they're legally exempt, purely because no one ever told them the threshold is lower than state pension age. On top of that, if you're under 60 but you receive pension credit, you also get free prescriptions. And despite all of that, this remains one of the most underclaimed benefits in the entire system. Thousands of people who qualify right now continue paying purely because no one ever told them the exemption exists or how low the age threshold actually is. Who does it help the most? Anyone taking multiple medications regularly. This is enormous for you. The action is simple. Next time you're at the pharmacy, tell them your age or that you receive pension credit. That one sentence can save you hundreds of pounds a year. Over a decade, you do that math. And while you're thinking about healthcare costs, ask about one more thing in the same family, because it usually travels right alongside it. It's called Help with Health Costs, and some people know it by its other name, the NHS Low Income Scheme. This one is aimed at a completely different set of bills: dental treatment, eye tests, glasses, and even help with travel costs to hospital appointments. If you qualify, and many of the very same people who qualify for free prescriptions also qualify for this, it can dramatically lower what you pay for routine healthcare that isn't covered by the NHS. And here's the reason I bring it up the moment we finish the last one. In a lot of cases, receiving pension credit enrolls you in help with health costs automatically. So that's two of the single biggest health cost breaks in the entire system, both unlocked by one application. For somebody who wears glasses and sees the dentist regularly, that's not pocket change. That can be one of the largest benefits on this whole list, and it's bundled right in with the eligibility I just told you to check. Number four is smaller in pounds, but it's still a bill you can legally stop carrying in full. So I'm not going to skip past it. There's a scheme run by most energy suppliers called the Warm Home Discount, and it takes £150 off your electricity bill in one lump payment during winter. And separately, if heating your home is ever a strain on the budget, there's the winter fuel payment between £200 and £300 paid automatically to most pensioners, and cold weather payments, which trigger an extra £25 for every 7-day period of freezing temperatures. Now, I'll be honest with you, these aren't the glamorous ones on the list. £150 once a year isn't going to change your life. But here's how I want you to think about it. It's one more recurring cost that the system already decided people in your situation shouldn't have to carry alone. And it's sitting there unclaimed for the same reason as all the others. You only get it if you're on the right list or if you ask. There's also a scheme that takes around £8 a month off your phone or broadband bill if you're receiving pension credit. It's called the social tariff, and most of the big providers offer it, but they don't advertise it loudly. When you have a few of these stacked together, the small ones and the big ones, that's when the monthly number really starts to move. And that brings me to number five, the one I told you to stay all the way to the end for, because this is the one that quietly costs people the most year after year, and it's the single easiest one on this entire list to fix. Remember that brand new age related allowance I told you about at the start? Well, on top of that, the UK tax system gives every pensioner additional protections through something called the Marriage Allowance and Married Couples Allowance. The latter is a second, completely separate relief, and it's been sitting in the tax code for years. It stacks right on top of the regular personal allowance, and now it also stacks with the new age related increase. If you're married or in a civil partnership and at least one of you was born before April 6th, 1935, you can claim married couples allowance, which reduces your tax bill by up to £1,037 and 50 pence a year. If you were born after that date, you might still qualify for marriage allowance, which lets you transfer £1,260 of your personal allowance to your spouse if they earn more than you. Put all of it together, the regular personal allowance, the age related increase, and the married couples allowance or marriage allowance. And what you find is that a very large number of pensioners owe far less in income tax than they believe they do, and a meaningful number of them owe nothing at all. But here's the trap, and it's a quiet one. Those same people keep overpaying PAYE from their pension, or they keep handing their taxes to someone who never stops to adjust for their age and marital status. And so they hand HMRC an interest free loan every year and call it normal. In my reading of it, this is the most common and the most fixable money mistake that pensioners make. What I think most people don't understand is that the tax system isn't trying to hide this from you out of malice. It's just that no part of the system is set up to walk over and tell you. The easiest move you can make is this. When your tax affairs are sorted this year, confirm that both your age related allowance and any marriage related allowance were applied, and then ask whether your tax code should be adjusted going forward so you stop overpaying every month. It's not a battle. It's a box that simply has to be ticked correctly. Now, if you do have some real assets, let me give you a few bonus moves that almost nobody ever hears about because for the right person, these are worth more than everything else on this list combined. The first is council tax deferral or equity release for care costs. In a number of situations, once you reach a certain age or if you need to move into care, your local authority can agree to defer your council tax or care home fees, and the debt is simply settled later when the home is eventually sold or passed on to your heirs. You keep your cash flow now. The second is the surviving spouse or civil partner exemption. When one partner passes away, certain council tax discounts and exemptions don't automatically transfer, and families lose them by accident. But if you notify the council promptly and file the right paperwork, the surviving partner can often keep the deceased partner's discount alive, instead of watching the bill jump in the worst possible year. And the third is one people laugh at until they add it up. Once you hit state pension age, you qualify for a senior rail card, which gives you a third off most rail fares. You also get free bus travel in England with your older person's bus pass, and in London, that's the Freedom Pass, which covers the tube, buses, and overground. It's small every year, but it's your money, and it's sitting there. So let me bring all of this back to where we started, with a real person. I once worked with a woman I'll call Margaret. She was 72 years old, living in Kent, a widow in a paid-off home that had quietly doubled in value over the years, getting by mostly on her state pension and a small workplace pension. And when we sat down and looked at her situation, here's what we found. She was paying full council tax every month. She was paying for every prescription, even though she'd been over 60 for more than a decade. And she was paying more in income tax than she actually owed because her pension provider had never adjusted her tax code for her age-related allowance or applied married couples allowance before her husband passed. All three of those at the same time. And every single one of them was something she had the legal right to stop. So we filed 3 applications, council tax support with her local authority, confirmed her free prescription entitlement with her GP surgery, and contacted HMRC to correct her tax code. Nothing about Margaret's life changed. She didn't move. She didn't sell anything. The only thing that changed was how much of her own money stayed in her account at the end of every month. And here's the part I want you to really hear. She wasn't gaming the system. She wasn't getting away with anything. She was simply finally claiming what she had already earned over a lifetime of doing everything right. That's the entire point of what I'm telling you today. Being legally entitled and actually keeping the money are two different things. And the only bridge between them is the form. The agencies are not going to build that bridge for you. So here's exactly what I want you to do this week, and none of it will cost you a pound. First, ring your local council and ask them by name whether council tax support, single occupancy discount, or any exemptions are on file for your property. If any of them aren't, ask which form adds them and what the deadline is. Next, check your entitlement to free NHS prescriptions and help with health costs. If you're over 60 or receiving pension credit, you should be paying nothing. Finally, the next time your tax affairs are handled, confirm that your age-related allowance and any marriage-related allowance were applied, and ask whether your tax code should be adjusted. And if the cost of paying someone is part of why you've been putting all of this off, listen closely, because you don't have to pay anyone. There are free advice services staffed by trained advisors. One is called Age UK and the other is Citizens Advice. They will sit down with you, review your entitlements, and help you apply for everything you're owed, completely free of charge. They know exactly which reliefs to look for. So for most of you, the cost of finally catching every one of these is nothing at all. That's it. A few phone calls and a couple of forms standing between you and money that's been yours all along. If this one caught you off guard, there's another video right here on the channel where I walk through council tax reliefs in much more detail, authority by authority. It's the same kind of money hiding in the same kind of silence, and the card for it is on screen right now. One last quick thing, and it matters. This is general education, not personal, legal, or tax advice. And these rules really do vary by local authority, by income, and by individual circumstances. So always confirm your own situation with your council, Age UK, Citizens Advice, or a qualified professional before you act. And if anything in here helped you, do one thing for me in return. Send this to one person you know who's over 60 or receiving their state pension. It won't cost you a thing, and it just might put a few £100s a month back in their pocket. I'll see you in the next one.